Hello everyone, welcome to Just Invest Today, and today we're doing an updated analysis on Alibaba stock slash business, man. So we gotta just reevaluate our position and what we think the company is actually worth. Because we know the market right now. We know Alibaba has been getting crushed in the market. It's a huge stock crash for Alibaba. So sometimes it's good to go back, reaffirm our valuation on Alibaba, and just get us our head straight. Because sometimes we can look at the market to tell us what the price of the business is actually worth, which we know is not true. Right now, the market is very uncertain about Alibaba, and we gotta kind of separate the differences between uncertainty and actual risk. People are uncertain about the future of Alibaba because all the CCP activity, people think the VIE structure is at risk, all the fines and all that good stuff. So people are just uncertain about the future because of that. Is it justified? Maybe, but I'm seeing the opposite point of view as the Chinese regulators are actually hinting at like trying to like kind of actually be apart and like work together with the US. So we're gonna do a quick business slash stock analysis on Alibaba quickly and to see what I think Alibaba is worth. Because I think it's worth way more than this, $136. So that's what the market is evaluating Alibaba at. But we're gonna do our own analysis. So we're gonna look through a couple of tweets before we get into it. Guys, can you please like this video, subscribe to my channel? I'm gonna be providing you with so much new content, man. Like it, subscribe right now. So here's the first tweet. If Alibaba behaved like a normal stock and followed its long-term EPS, it would be trading at 260. And look at this chart. When you look at just look at this chart. The black right here is the stock price basically, and look what's been Baba's been doing. It's literally been following strongly EPS growth, right? And this is super key because it just shows you that the earnings growth, the revenue growth is what generates your returns in the market. Like that's what you really, really gotta focus on, the actual business. And then here you can see in 2020, 2021, that's when the huge crash happens, and then that's all market sentiment. But look where the EPS, or look where the EPS is still. If it was trending the way it has always been trending, Alibaba has been trending with the EPS growth this whole time, it would be worth at $260 minimum. Minimum, man. It'd be trading at 260. So just looking at that, you can see where Alibaba should be right now. Like 260 conservatively, right? This is another tweet, man. This is a tweet by Frank. Shout out to Frank. This was in September 7th, 2021. He posted this, man. Go follow his channel. But this is a good little tweet that he said. Over time, over a 5-year time, 56% of the returns are impacted by emotions or the market sentiment. Multiple expansion. After 20 years, only 28% of the returns are emotional. So just look at this chart right now. So you can see the multiple change is in the 5 years is what it's going to drive it a lot. Some of its earnings growth and dividends 45%. But when you get to 20 years, look at the earnings growth. The earnings growth drives it the stock price mostly, not the emotions of the market. So, and there's actually been another chart, I couldn't find it, but another chart seems like 5 to 10 years, revenue growth is the main driver of the market and the actual stock price of the stock. It follows the actual revenue growth and the free cash flow. So this shows that after 20 years it's 72% of its earnings, but like there's other charts that show actually revenue growth and actually the free cash flow, the earnings growth being way higher in just 5 to 10 years out. Not even, you don't even have to wait 20 years out. So that's going to show you, that's going to impact Alibaba's future. Next tweet by 21st Century. Look what you can buy Alibaba at. It's actually crazy when you actually think about it. Like doing this analysis, it just doesn't make any sense of what you can pay for Alibaba. So market cap 365 billion for Alibaba. So this is not including the main e-commerce business. Like think about this. You get the cash, your investments, the and stake, which is 33% for $160 billion. That is without the main e-commerce business. So that's the implied value of the rest of the company for $205 billion. She's paying $205 billion for the main core business. And guess what? This is not even including the cloud, right? So you're not even including a cloud in this evaluation that's not profitable yet. You're not including the two overseas businesses in Southeast Asia and in Turkey. And then when you think about it, it has a forward earnings of 30 billion on top of that. So you're actually paying a PE of less than a 7 when the top line is growing at high teens and cloud isn't even profitable. That is what you're paying for the business, man, which is actually literally insane to think about. You're paying nothing. It's dirt cheap for an actual growing business growing at 20% top line, and bottom line is probably going to be growing still at 15-20% around there. So that's what you're looking forward to when you're actually buying the company. And then remember, we got to think about the business as in, like, just when you think about Alibaba, you got to think about the whole business. So when we're buying companies, Warren Buffett always says that you want to think about buying the whole company. So if I bought the whole company of Alibaba, it'd be only $371 billion, and you're getting what? On your $371 billion purchase, you're getting $22 billion of yearly income, right? So I did the calculation. It's around a 6% earnings yield on your money. So a 6% earnings yield growing at 20% top line growth, that's amazing, man. That's an amazing earnings yield when you think about interest rates, or you think about bonds, or you just think about what else is in the market right now and what else can you buy at a 6% earnings yield as the number one dominant company in China, number one and number two. You can't find deals like that really anywhere else, right? Then on top of that, China regulator seeks to avoid U.S. delisting of the Chinese firms. So this is just what I'm going back to, as China wants to work with the U.S. and U.S. they're working together. They're going to get things sorted out because they do not want to get delisted. They want foreign investment. And that's what I keep going back to. Why would China not want foreign investment from the U.S.? It doesn't make any sense. These officials are they're actually gonna work with the US and helping to stop this, curb this. So that's why I'm not seeing all these VIE risks. If that was a risk, why would they continue to actually care about if the US delists the companies or not? They wouldn't care at all. So that's my perspective on that. And then when you come to the discounted cash flow statement of Alibaba, man, if this company grows at 20%, this company is a $500+ company. $500+ company. And I'll even give it, and this is a 15% discount rate. And what's the interest rate now? Like 1.2, 1.3? Like usually discount rates are like 6%. And I'm putting on a 15% return. $250. And that's only a 50% growth from here on end. And I think that's very low. 50% growth, I think they can grow way faster than that, 20% plus, right? And that's a growing business. So you can get Alibaba for $250. And that's what the actual fair value is. Fair value. So that's what I'm saying. Going back to the other chart, 260, 250 is fair value if you're expecting a 15% growth, which I don't expect that. They already said top line should grow 20 to 23% moving forward. And if that's growing at that rate, this company is worth at least $500. Easily. So, guys, man, what do you think about this video, man? I'm just telling you, expect the volatility, sit back and just enjoy the ride. If the regulation doesn't kill the company, then you're just gonna see the profits rise. It might be 1 year, 2 year, 3 year. You don't know when it's gonna come, but when it think about this, when Alibaba does pop and people see that sentiment shift, this $136 is gonna go to like $350 very quickly. Like, I feel like the sentiment is gonna shift so quickly, you barely will see it coming. So that's my view on the stock, on the valuation, the business valuation, stock analysis on Alibaba, man. Tell me what you think. Is your views in line, or they're not in line? Tell me right down below. Leave a comment, subscribe to my channel, and I'll get back to you in the next video. Peace!